Can you see my screen now? Can anyone see my screen now? David, I wanted to say something. Can you see my screen?
Yes, I can see your screen.
Okay, you can see my screen. That's good. If can you see my screen? If you can see my screen, then I think we need to continue because I don't know. Some person said that they can't see my screen, and I feel like that should be network. That should be network issue. But then the class is recorded, of which at the end of the class, everyone will have the privilege to go back to view the videos for today's class. Go back and learn back, relearn, and So, all right. Once again, welcome to today's class, and thank God that you made the very best decisions in this January 2025 by trying to have a financial knowledge. And this is one of the best decisions I made last 2 years. So this is one of the best decisions I made last 2 years to trade in financial markets. And if there's one of the things that gives you upper hand in life and generally, whereby you have leverage to do certain things, Forex markets gives you that. And I've really enjoyed it. So, all right. Firstly, what is Forex market? What is Forex? Forex is a foreign exchange of which each and every one of us knows about, and Forex market is the most traded market in the whole world. Yes, with a total volume of $7 trillion on a daily basis. So that's what makes it the most traded financial market. And believe me, if there's one thing I know, is that imagine 7 million that comes in on a daily basis inside the market, and people makes money on a daily basis from this market. Yes, and by the end of this class, each and every one of you will be partaker of this, will be partaker of this profit people make on daily basis. If you follow my strategy and if you follow each and everything that, or the instructions I will be giving for you to make money. So, Forex market has the largest and the most liquid, and is the most liquid market in the world. It's the most. It's way larger than the crypto markets, of which the crypto markets last year, 2024, was able to hit the target of $1.something trillion. Yes. So, of which is how many percent of us entering into the Forex market is way beyond what's entering the Forex market. Even the stock exchange is not seeing this volume of money on a daily basis. So, what are the things that one can trade in Forex market? Number one is gold. Each and every one of us knows gold, and gold is one of the most traded, commodity in the Forex market. Then shares and silver is another thing that is being traded in the Forex market. Shares, that's Euro shares. Two, crypto can be traded in the Forex market because currently a whole lot of brokers are doing that. You can have access in trading the Forex market based on your broker. I can attest to that so well. Then beyond that, hold on 1 minute. So now beyond that, commodities, which gold is one of them. There's a whole lot of commodities. Crude oil is involved, gold is involved, silver is involved, metals, so many more of them. Then bonds, energy, indices, currencies. These are the things one can trade in the Forex market. And these are the very basics of things that you need to know, things one can trade in the Forex market or in your broker. Number one is gold, silver, crypto, commodities, bonds, energy, indices, and currencies. So these are the things that you need to know that you can trade as a trader in the Forex market. So the next thing that we need to know is trading time and trading section. Trading times differs, and one of the best things you can do as a trader or somebody who is aspiring to be a trader is to know time zones, how you can make profits in one specific time zone or the other. Because you cannot trade and make profits in the Forex market without knowing the time zones. Yes. There are times you make profits and there are times you make losses in the market. There are times you enter the market might not really make any move. So these are the things you need to understand. These are the very basics you need to know that happens in the Forex market. So here there is a Cindy section. Cindy section is I don't know if there is anybody here that is not within the borders of Nigeria. So we can help you differentiate time zones based on your time, the time of the country you are. By the time you have this knowledge, so that you can leverage on it. So since this section opens the market, the trading day is 5 p.m. EST time, which should be in our own time It should be at our own time, 6 in the evening. 6 in the evening. That's when the market. That's when the market opens. That's when you have the access to trade the market. Then we'll have the very second time we have there is Tokyo. Tokyo time opens by 7 p.m., which is around 9 p.m. or 8 p.m. Yes, this should be 8 p.m. in our own Nigerian time. Then we have London section. London section opens early hours of the morning while we are sleeping here in Nigeria. Yes. While we are sleeping, it opens early hours of the morning. This should be around 5 a.m., 6 a.m. That's when the market opens. Then we have New York section. New York section opens by 2 p.m. in Nigerian time. Yes, that's when it opens. That's where, by then, in their own time, it is 8 a.m. Yes, it's 8 a.m. in their own time, but in our own time, it's 2 p.m. So, and the very time that has the highest liquid volume in the market is New York section. This is where people make a whole lot of money and still lost a whole lot of money. And another time that has another liquid is London section. Yes. So that's it for time. So Ozioma, you are raising your hand. Can you open your mic? Can you open your mic? You are raising your hand. You want to ask a question, sir? Ozioma, can you hear me? Okay. If you can hear me. I can't hear you clearly, sir. Can you be a little bit audible? Okay. All right. Let's move forward. Let's move forward. That's it for the time trading, trading time and sections and all that. These city sections, this Tokyo section, this London section, and this New York section. Let's have this at the back of our mind. It's either you trade early hours of the morning around from 12 to 4 a.m. or you decide to trade from 6 a.m. to perhaps 12 or 11 a.m. Then you enter the market again by 2 p.m. then down to 5 p.m. So this is one of the things that we need to really know about time and all that. So let's move into the next slide. Like I said here in my next slide, I said these sections named are derived from major countries in which most of the transactions are done. For example, since this section is represents Australia and other countries around that time zone. So like I specified here, Australia is one of the countries that is under CD section. Then Tokyo section, sometimes called Asian section, represent Japan. Japan, China, things that surrounds Japan and all the rest of it within those borders, and some Asian countries. Then London section, of which and every one of us know, has to do with United Kingdom and the countries within it. Europe represents the US and Frankfurt, Germany, and so on and so forth. So that's that. Then what are the basic terminologies in the forex market? What are the basic terminology? Because one of the very best thing one can do for his or herself is to know the pros and pros of of a certain thing that he or she is learning. And in the forex market, there is a lot of terminologies, basic ones. By the time we continue, we'll get to know a whole lot of them. But then these are the very much basic, of which I will start with 1 minute. All right, of which I will start with a few of them. Number one is currency pairs. Currency pairs has to do with, forex is traded in currency pairs. That's whereby you talk about currency. You're not talking about gold, because gold is not currency, and all of those things. Things that are being bought, currencies that are being bought, and the currencies that are being sold. So then number two there is exchange rates. The rate of which one country's currency can be exchanged from another currency. Whereby, let me use naira to dollar. We are trying to exchange from naira to dollar. That's an example of exchange rates. Now, the number three there is base currency. Base currency, these are major countries like that has world powers, that has major currency, that their currency are driving the global market, and of which GBP is a base currency, USD is a base currency, Euro is a base currency. But from my example here, GBP is a base currency. Then we can have then number four there on my slide is quote currency. What is quote currency? The second currency quoted in a currency pair, such as GBP USD. Now let me explain it so that you understand it. Now, based on quote base currency, GBP is base currency. So the quote currency under GBP is USD. So that's why in forex markets, if we open our chart, by the time we go to that point, once we go to that point, we'll be able to see what it looks like. Now, GBP is base currency, then USD is quote currency. Most times you see USD JPY. Then at that moment, USD becomes the base currency and JPY becomes the quote currency. Or you can see Euro USD. At that moment, Euro becomes the base currency and USD becomes the quote currency. So there is a whole lot of currency pairs that we'll get to know about as time proceeds. You get, so that is that. Then number 5 on my slide is long position. What is long position? Long position is referred as buy. They are trying to purchase an asset. When somebody tell you go long, it means that you should buy. So if I tell you now to go long on Euro USD, I'm referring this as buy Euro USD. I'm referring as buy Euro USD. That's it when I say go long. Yes. So this is one of the terminologies in the forex markets. Go long means buy. Then number 6 is go short. that's short position, which is sell. So when I tell you to, let's say now I'm referring as go short on GBP JPY, I'm referring as sell GBP JPY. I'm telling you to sell off your assets that you have. Like go long is buy, short position sell. That's that. Then number 7 on my slide there is bid price. You know, the bid price is the market price for the sale of an asset. Is the price like whereby people are bidding, you know. This is the original, this is the price, you know, the original price, that's the bid price. Then what the ask price, which is number 8, is the market price for purchasing an asset. You know, when by you enter the market, you start pricing stuff. You know, you start bidding. Say, this television, how much is it? You know, okay, you be like, okay, 1 minute, please. Now, okay, you be like, okay, the buyer or the seller is telling you, okay, I'm selling at 50,000. Okay, you be like, I'm bidding 40,000. So that's it once it comes to bid and ask price. Now, what is trade, which is number 9, the difference between bid and ask price. So there is a gap in between the two. That's what is called spread. And most times where your broker makes money is from your spread between your ask price, between what the market is, what you are bidding, and between what is in the market, the ask price. So that's where your brokers see their money. And most times markets can be manipulated, or most brokers that that I've worked with can manipulate their spread to make more money from you. And there are certain time zone that that happens, whereby you have a wider spread, more especially early hours of the morning. You come to see that you have a wider spread in the market. So that's that. Then there is what we call appreciation, whereby the increase of volume of an exchange rate, whereby the market is going high. Just like, let me use Bitcoin as an example. Bitcoin has appreciated so high within the last few months. Yes. So number 11 is depreciation, whereby there is a disvaluation in the market. There is a decrease in volume of an exchange rate. So going up, appreciation is the market is going up, is going high, while depreciation or disvaluation is a market or the value of the currency or the commodity is going down. Then number 12, number 12 is gapping. Is an opening price is an opening price significantly above or below the previous day's close with no trading activity in between. This means that a limit or stop order could be filled at a price from that described order price. Okay, let me explain this. after the class, I will tell us the few apps that we'll be using, because one of the things about this class is to be a practical class, and whereby we will know what is, buy order, sell order, and all of those things, buy limit, sell limit. So sell limit is this, whereby you place a position. Let's say, assuming now ask you to place a sell limit. Now the market, whenever the market gets to the point you place your sell limit, it triggers you. The same thing with buy limit. There is a stop order, whereby if I tell you to buy stop order, is almost the same thing with buy limit and sell limit. So the difference there is this. This must have to move to entry before it triggers you, but then this one immediately, and the market immediately gets to that point, you just move. But most times it's a little bit complicated, a kind of confusing as well. But then in our practical class, we will know the difference and how it works perfectly well. And that's that on that. Then the very next is PIP. PIP, what is called PIPs or PIP? The full meaning is percentage in points. Whereby, let me say that this is the points or the percentage in the market. Whenever somebody says, okay, I made 1,000 points today in the market, he's telling you that he made 100 pips in the market. 100 points or percent in points in the market gives you 10 points in the market. Okay, let me read it so that do I really need to read it? Is the smallest price movement any exchange rate can make. Is the smallest price movement any exchange can make. So where you know your profit in the market is through how many pips, and how you know your losses is how many pips you lost in the market. It might not really be the capital that you are trading with. By the time you said in today's market, I lost 50 pips in today's market. So from there, that's where you get to know the total amount of money you lost in the day. Then if you say that I made 500 pips, like today, and my trade today, I made about one of the trades that we took was 250 pips, and the other one was 270 pips, of which it shows that in the first trade I made 2,500 pips price in points, and in the second trade I made 2,700 price in points for the whole day. So that's that. Then the very next one, which is 14, is lots. Forex market or Forex is traded in lots. Forex are traded in lots. A standard lot is equivalent to 100,000 units of the base currency. So imagine you are trading one standard lot size. It's showing that you are trading 1,000 lot size on GBP USD. What is this telling you? That you've already bought, let's say it's a buy position, you've already bought 100,000 units of GBP against the quote currency. Yes. Or if I say, okay, you are trading in 0.10, that means you've already bought 10,000 units of the base currency against the quote currency. So that's how it's being done. There are many lots of 10,000, which I mentioned, 0.10, which is a mini lot size, and there is a micro lot size, which is 1,000 units, which is 0.1, and that's the least we have in the forex market, 0.01 rather, which is 1,000 units. So by the time we will go into the live section, perhaps on Wednesday or Thursday, then we'll see how that runs. And believe me, one of the reasons why you be like where you sustain your capital, or you sustain you do sustainability or growth in the forex industry is how you manage your risk very well. And how would you manage your risk very well is the level of standard, the kind of lot size you use. Your lot size determines, if the market is going against you, how much you lose, and if the market is profitable, how much you make. So, but then when we get to risk management, I'll be able to show you how you can manage your risk very well with your standard lot size, the very best standard lot size based on your account size. I'll be showing you that. Then what is leverage? Leverage is like a money you are borrowing from your broker. That's leverage. That's the simplest definition I can give to it. It's the money you are borrowing from your broker. Yes. It's the smallest, the amount of money. Assuming, hold on 1 minute. Okay. Now, assuming that you have $100 and you are trying to borrow like $10,000 from your broker. Yes, that's it. And with that, that's where you'll be able to make more money. By the time let's say now you're $100, let's say you enter the market with $100, you make small amount of money compared to somebody that's entering the market with $1,000. But one of the things leverage gives you, it gives you the opportunity to enter the market with a higher amount of capital based on what you have in your funded account. So I'll be showing you how that works in our live account by Wednesday, and how you can make profits, because leverage, like I said, it gives you more leverage to larger amount of capital. Then the next I have there on my slide is margin. Margin is the maximum deposit needed to maintain an open position. Yes, is the maximum deposit to maintain an open position. So now let me give an example. With an open position of $150,000 and the leverage of 30, the required margin is $5,000. Now you are using a leverage of 1.30. You are using a leverage of 1.1:30, then, and your open position is $150,000. So the required margin there is $5,000. Somebody just dropped a message that network is really terrible, but then one of the things there is this, is we're certain that at the end of the class you can be able to go back to watch the video later. Yes. You'll be able to watch the video later on, either here or YouTube, but definitely the video, you have the video, and later on I'll be able to give you some materials whereby you can still fall back to your personal time, whereby you can go through them. Yes, I'll be able to do that. Then risk management involves, strategies in order to help you control or reduce your financial risk. So that's one of the things that we need to know about risk management, whereby you'll be able to manage your risk, manage your accounts, control your losses in the market. So, but one of the basic things is this that you need to know is this as a trader. One of the things that sustains you in this industry is your risk management, not your strategy. You can have the very best strategy, but then one of the things that will keep you in check and one of the things that will make you profitable is your risk management, not your strategy. So anybody, you cannot call yourself a trader if you don't have a proper risk management. Yes, you can't call yourself that. So, and one of the things that I'm going to teach you is how to manage your risks properly for you to build sustainability in this year 2025. And if there's one thing I can assure each and every one of us that is there in this class, it's something that I'm promising you for free. See, this 2025, you make money in the Forex market if you apply proper risk management, and I'll help you to do that. Then number 18 there is this stop loss. What is stop loss? Stop loss is whereby you are trying to is when you place an order, is a risk management tool allowing a position to be closed if perhaps the market is going against you. So let's say now the market is going against you, you have the total account of $50, and then in that open position you are risking $5. So one of the things your stop loss will help you do is this: once it gets to that particular point, yes, the market is going against you. Once it gets to that point, when you set your stop loss, it will automatically close at $5 loss, giving you the opportunity to still have $49 in your account. So one of the things that helps you a lot to save your account from heavy losses is your stop loss. Anybody that is teaching you to trading without teaching you how to use your stop loss very well is not helping you. So in each of every of our trade this period, we'll be using stop loss in it. Yes, we'll be using stop loss so that we protect our account from heavy losses. So that's that in stop loss. So then for today's class, my very last slide, take profits is whereby, a profit order is a risk management to align position to be closed automatically once the market reach where you place your take profits. So it will automatically close because you've already set it. Then it will only close you in profit. While stop loss will only close you in losses, but take profit will close in profit. So profit and losses we both know, we all know what profit and loss is all about. Either you profit or you're having losses. So I think that's just it for today. This is the very basic thing that you should know in today's class. Yes, this is the very best thing you can know. This is the basics. Knowing things that you can trade in the Forex market. What is Forex? What can be traded in the Forex market? The time zones, and how to leverage on those time zones. The basic terminologies in the Forex market. Then by tomorrow we'll be moving deep into so many things. How to calculate your pips, and how to know your base currency, how to calculate it, your base and your post currency. Then you'll be able to see your bid price and ask price. So by tomorrow the class will start exactly by 7, like the way we did today. And trust me, 1 hour every day will be very much nice. And believe me, by the end of this week, each and every one of us will have an amazing experience with us in the Jewish Capital Academy. Yes, like I said, this is the very first segment, or the very first section of this. Now, I don't know if anyone has any question, any confusion in the things that I said. I don't know if there's anything related to that. Any question based on what is Forex, the terminologies, the time, and the sections. So I don't know if there's anyone that have any question. But let's not forget that. At the end of the day, definitely the video will be uploaded on our YouTube, because yes, we already have a YouTube channel, and it will be uploaded there, and then it will still be here too, so that we can still come back here anytime, any day, to still go through the videos. Then another thing that I'll be doing now is this: I'll be dropping this slide on this group so that you can still fall back to it. But then I don't know if there's anyone that have any question here. You came in late, and there are a few things you need to understand at the long run. You can open your mic now and ask your question.
Okay.
Yes, Elisha, I can hear you. Go ahead with your question.
Right. Please, could you talk more on that leveraging? You mentioned about
Leverage.
leveraging. Yes.
Okay, leverage is whereby you are trying to borrow money from your broker. You are borrowing money because yes, you have a smaller capital. A smaller capital. So you are trying to leverage on your broker's capital to trade for it to make more money. Yes. Is that confusing? Elijah, is that confusing? Open your mic if.
Okay, I got that. So how do we use that leverage to our advantage?
All right. By tomorrow, I'll be dropping a link whereby you register to a broker, and I'll tell you the leverage you use, so that most times one of the things that you use, matters if you remain in the market or not. Whereby I only recommend 1:1,000. Anything above that will put you into trouble, and more especially when you are trading and more especially while you are trading gold. So the market has different reaction totally, depending on the leverage you are using. So it matters a lot. So, but one of the things, I'm giving you an assignment, everybody. I'm giving assignments of which the assignment is to download 2 apps that we'll be using. And one of those apps is MetaTrader 5. Put it down, MetaTrader 5. Then the second one is TradeView. Download those apps. MetaTrader 5, you don't really need to register anything on it. The most important thing is by tomorrow I'll give you a link whereby you register a brokerage link whereby you register, and perhaps by Wednesday or Thursday we'll have a live trading section whereby you fund your accounts. After funding it, then the rest will be history. We'll trade with it. So I will be able to put each and every one of us on how to go about that. Is that confusing now, or is that clear?
Okay.
All right, Franklin.
Okay. Sorry. Good evening.
Yeah, good evening.
Thanks for the class and everything. It's okay. I want to ask like one thing. Like, do you have more like the reference point aside the topics that you drop in the group? Do you have more like a reference and then can actually go and learn more aside from what you just said?
Okay, I don't know if you had heard me earlier enough. I said it clearly that in subsequent time, definitely I'll drop materials whereby you people can still fall back to. Yes, I made that statement. Is that clear now?
Thank you.
Yes, I'll definitely give you materials, but that might not really be today. Is there any question, any other question? I want this class to be exactly 1 hour like the way I had wanted. Is there any other question? Yeah, can you be a little bit audible?
Okay, can you explain more on the sell limits and buy limits, please?
Okay, buy limits and sell limits. Let me put it to you now. If I ask you to place a sell limit, then the only thing that the market will do for you, or the only thing that will okay, hold on, let me put it down. Sell limit is whereby you are not executing a trade instantly, but you want the market will definitely reach exactly where you place your buy limit or sell limit for it to execute. So that's it. So like some people that is working, I might come and say buy sell limit, like sell limit, place sell limit on a specific pair. You don't really need to bother yourself. The only thing you just need to do, put your parameters and just close your phone or your system. Once the market gets there, it will trigger you, it will execute by itself. And believe me, you don't really need to worry about it. So as long as you put your parameters, your take profits and your stop loss, forget about it. So once the market gets there, it automatically triggers or execute by itself. So that's that. I don't know if that's confusing or if that's clear now.
Clear now.
All right. Another question? Do you have any other question? All right. Without any other question, I believe I didn't confuse anybody. But then if you are still confused in any area, I'm always available for you to ask me any question. You can chat me up directly. Then